Hey guys, Akil Stokes here. Welcome back to another video. We're gonna hop straight into things this week, and I'm gonna share with you some of the best trading opportunities that are on my radar for the week ahead. Before we get started, however, I wanna say a big thank you to everyone that attended this past week's Trader Vault seminar. It was an amazing event. I'm still humbled and honored to have been able to share the stage with some of the best minds and best people in the trading industry, and the feedback that you guys gave from it was amazing. So thank you. Can't wait to do it again next year live in New York City. Also, if you've been following this video for the entire year, I've been keeping you updated on how my trading has been. We started off with a bang, a massive start to the year, and then I kind of went sideways for about 2 months. But guess what? Thanks to this week and some amazing trades, I've finally broken out of that sideways channel to new equity highs, and I can't wait to share that with you, since I know you guys have been getting a lot just from seeing the daily or weekly grind that is trading. So let's get started here on the euro dollar. You see some of my old notes on the screen. This was an advanced pattern formation that was on the radar. Obviously, it's not going to be something that's going to fill because we broke out to the upside. We're actually looking at this as an opportunity to trade a breakout to the upside, but you can see the market had other plans and decided to go on without us. Now, I want to bring this up because this is a tricky situation. When you look at this initially, right, you say, Akil, the price has kind of consolidated a little bit, right? Kind of like my equity curve. I'll share with you a little bit later. And then we put up a nice little breakout, right? I should be looking for a pullback and an extension. If you follow this video every week, you know, or if you follow me in the live room every day, my trading style is pretty simple. There's only about 3 types of trades I take. So you should be, if you're serious about trading, you should be following along or kind of guessing what I'm going to do or what I'm going to look at in these videos as we stare at the charts before I actually do it. So you're probably looking at this and saying, hey, Akil, break or pullback trade. Look for the pullback into the zone of this candle with the very nice wick, and then look for longs. But this is why we always want to start with our top-down analysis, right? We always want to go through a process of trading. We want to have a higher time frame and a lower time frame, and in my opinion, it depends on the strategy, honestly, but you always want to have perspective of what the market's doing. And if we look left at our most recent level of structure, right, we're right, and I'll even go to a higher time frame, make life a little bit easier on you. If we look left, right, you can see that we're running right into a previous zone of structure. So we don't necessarily want to be buyers at that zone, right? We can see price came from this swing down to here. We were traced back up. That's the structure level we're talking about before doing this little dance right here. So I would actually wait for a violation of this higher level. Wait for a violation of this 121.13 levels, and use that as the opportunity to trade it to our next level of structure, which is going to go from 121.51s to about 122.42s. Now, not a lot of breathing room, I understand, so probably not something for a higher time frame trader. Daily traders, you're probably not going to have a chance at this. But if you're someone that's more intraday, if you're watching, I would say the hourly and below, we can easily get a break of that first level, get a pullback, and open up a lot of room for profit. If you want to kind of bring some confluence to that area as well, I'm just eyeballing this, but let's see if it works. If we take a Fibonacci extension and invert it, right, we can't use it traditionally because we don't have a pullback yet in this extension leg. But if we take it from our previous swing low to swing high and work backwards, give me a second, I want to be exact with this. Kind of delete the chart here. If you go from our swing low right here to swing high backwards with our Fibonacci extension tool, and of course back down, yep, look at that. You're going to see we have a 1618, which is the golden mean, right? A 1618 Fibonacci extension right at that same zone we're looking for our take profit. So again, I would wait until these highs are violated, but once these highs are violated, and we'll drop down to a 240 again, once those highs are violated, then look for, there we go, then look for a continuation up to that higher level. Next, we're going to head over to the pound dollar, the cable. Pound dollar, this was a sneaky one, right? If you look at your chart right now, many of you guys are saying, man, Akil, that looks like an awesome Gartley pattern that played out amazingly, right? We had an X to A, an A to B, a B to C, and then a CD completion, and boom, we ran over. We did just what we were supposed to do, but there's one little problem, right? this is why we have rules, and this is why we want to follow rules as well. This is not going to be a valid Gartley pattern. Why is that? Because it's hard to see here, but you can check as you go into your chart. The C leg violated the A leg, right? So when we look at these pattern formations and really any trading strategy that we have, we want to go through it in a process, right? Austin Silver did a great presentation this Friday at the Trader Vault talking about physically writing out his rules and making, how sometimes his ego gets in the way and he wants to be quick and he wants to take something because it looks good, but kind of slowing himself down and really having an outer body experience. Seriously, he said this, and it makes perfect sense, of going through the process and writing and having that checklist physically printed out and crossing it off. And if you do that, you're gonna limit your mistakes. And we all know that mistakes are what kill traders. It's the number one thing stopping traders from being consistently profitable. It's not lack of knowledge. It's not strategy, right? All of that stuff plays a role. But you can have all of that stuff in a line. If you don't follow it, you're gonna blow money. So going through the process, and we look at this, we have our X to A, right? This is all valid, right? So step 1, identify X to A. Step 2, identify A to B, right? Step 3, make sure we have a valid C leg. Once we get to this part, right, and we understand it's invalid, we can't even move on with the rest of the pattern. So it's important to go through that process to really, have those checks and balances to make sure you're not in a situation that you don't want to be in. Now, regardless if this was a pattern, I was still interested up here. My partner Jason Greystone actually had a very nice trade here. I believe he did a video on it, I think Thursday or Wednesday, one of those days, a rising channel right in the structure. I wasn't able to get involved in this, right? This is a little bit too early for me, but I was hoping for a double top, right? At previous structure, look left, structure leaves clues, right? And then a rollover right to right here being our first level, this little inside level structure right here being our second level. And unfortunately, it didn't happen. But you don't whine, you don't complain. It's the market, right? There's the markets. You're going to make a lot of predictions that either never happen or you can't take advantage of. What you want to look for is the next opportunity. So price has come down to the level in which we thought it would come down to, right? So I'm no longer looking for shorts, right? We have reached the projection destination already. We have a little bit of relief, and I wouldn't be surprised, right? We're in a bigger level of consolidation. You can see from the pattern formations and just looking at your price chart, price moving from left to right, not from bottom left to top right, just kind of sideways. Wouldn't surprise me if we saw some more consolidation here. And we know that when the market consolidates, we tend to see advanced pattern formation. So what's next on my radar is another potential advanced pattern formation. This is going to be a smaller one, but same thing. We go through our checks and balances. X to A, step 1, right? Boom, we've got it. A to B, step 2, right? We know we come to a 57% Fibonacci retracement level. So that means we're going to be on alert for a bat pattern. If you got a little cheating tool like I do, it actually tells you what it could be at the top, right? But trust me, I do notice off the top of my head. I've been trading this way before we had the technology to assist us. It just makes life easier, right? Now we have our B to C. Now the last one violated. This one does not. So we have a valid C leg. Now, if we press up to 139.35s, right? This is going to be the start of our zone, 139.35s, and the zone ending at the top of our X leg. So where we begun the initial pattern formation, we're going to have a selling opportunity in a bearish bat. Now, again, advanced pattern formations, we're not looking for, or I'm not looking for any type of really deep continuation trade or anything like that. I'm simple, right? We're just looking for a slight pullback, a move from here to here, a chance to grab a little bit of profit and then get out and look for the next opportunity. Now, following up on pattern formation, we're going to take a look at gold, or not gold, excuse me, we're going to do gold next. We're going to do the dollar index here. I have a good lesson on gold we're going to do next, so make sure you pay attention to that. The dollar index, right? And again, speaking about consolidation, we've been going sideways here. And if we look at the most recent period of consolidation, right? So our highs being up here, our lows being down here. What we've recently done in the price chart is retest our lower period of consolidation, and we started to consolidate in our own right before popping up a little bit. Now, I don't know how this is going to play out. I don't know if we're going to rally across the range. I don't know if this is going to turn into some type of head and shoulders, if we're going to stay in the middle. I don't really care. What I'm looking for is the opportunity at hand. And what I see is price recently doing this. Price dropping down, retracing, smaller extension, right? Bottoming out here, pushing towards the highs. And then now we've got to make up our mind whether we're going to continue to go down, whether we're going to consolidate, whether we're going to, I guess we've already shown it, we're not going to shoot straight up, right? But I would expect some type of, consolidation, just like we've seen in the past as price looks to make up its mind. And again, in these periods of consolidation, this is where you see advanced pattern formation start to form. In the pound dollar case, we had a potential bat. This one is going to be a potential Cypher pattern. It's going to look something like this. It's a little bit of a different pattern formation because our C leg is going to be beyond our A leg instead of within it. And we're looking at an X to A right here, an A to B, this first retracement, a B to C with this extension, and then a CD completion right down at our 786. And that zone, just like with the bat pattern, that zone being from our D completion point all the way to our X leg down there. So a potential bullish Cypher pattern here on the dollar index. Again, with that completion zone being between basically 90.50s and about 89.70s. Now, I want to take a look at gold. I know we've gone over this before a few weeks ago. This thing is just it's a daily chart, so it takes time to play out. But this is a very interesting opportunity because we have a bear bat here on gold. And in this past week's Q&A, right, if you guys are on the platform, if you go over to, let me just bring the Q&A session over to you guys. You go over to the Q&A session, right? Remember, this past week's Q&A, we did a very nice conversation on managing an in-progress trade. Probably could have titled that a little bit better. But we got a question from a trader asking, what if I'm involved in a trade and I get a signal in the opposite direction? What rules can I implement to, should I stay in? Should I get out? What rules can I implement to manage it? And that brought us down a very good conversation about, technical versus psychological reasons, right? Understanding if we're exiting a trade from a technical reason or if we're exiting from fear. And trust me, when you're trading live money in the market, those two areas can become very gray and blended together because we have the ability, especially if we have a lot of subjectivity or if we're discretionary traders, we have the ability to really make up what we want to make up in the market. We can easily, be on a psychological meltdown, but tell ourselves it's a technical reason and that's an excuse. And we want to make sure that, we don't put ourselves in that situation. But this is an interesting one, right? Because you have a bat pattern here, right? And currently the targets for this bat pattern are going to be right here at this blue line. Used to be green. They must have changed it. Green line right here. However, if we go down to a lower time frame, right, you're going to see a smaller advanced pattern formation in here. X to A to B, B to C. Oops, sorry about try it again. Used to Ninja Trader. X to A to B, B to C, C to D a little bit down here. And this could be a perfect excuse, right? If you are a trader that doesn't have solid rules on how to manage a trade, if you're a little bit scared and you're going down to lower time frames to freak yourself out, you can easily look at this and say, oh, wait a minute, Akil, I should take profit right here instead of right down here because this is a bat pattern and it's a bat pattern, it's a bullish one and the market's going to go up. And if the market goes up, it means that my current trade is wrong. And these are the situations that we have to overcome in trading. These are the situations where we have to really trust ourselves. We have to trust our trading plan and we have to have a trading plan on how to deal with this. Now, how would I deal with this personal situation? Well, for me personally, right, this potential bat pattern would play absolutely no role. One, I'm already involved in a trade, right? My rules are once I'm involved in a trade, I'm going to stick with that trade until I'm stopped out or until I take profits. Two, this is on a lower time frame. For me, the higher time frame always takes precedent. The higher time frame is always going to be more powerful than the lower time frame. And if you're judging it inversely, if you're judging the lower time frame higher, more so than the higher time frame, you're going to be in a lot of trouble because you're going to end up like many traders I've seen who have a trading opportunity on the daily, and then before you know it, they end up seeing some type of higher high, higher close on the 1 minute chart, and they sabotage their trade. I'm telling you, there's no technical reason for doing that. It's all psychological, and you're just telling yourself it's technical to make yourself feel better. So I thought this was cool because we're having trouble looking for examples. We had an example, I think, with a rising channel or whatnot. But for you guys that saw the Q&A, or if you're going to go back and watch it, this is a perfect follow-up on last Monday's question of where you have to be disciplined, you have to have rules. Before you enter the trade, you have to know exactly how you're going to manage it, right? Because I can tell you what, if you're consistently, it's going to, for a newer trader, it's going to seem like a good idea. We're involved, right? The hyzer. It's going to seem like a good idea to consistently take profits off at this level. But I can tell you what, look what it's going to do to your risk reward, right? Your reward should have been right here, right? Now your reward is here, right? You're cutting about a third off of your reward. And trust me, if you do that, your equity curve is going to pay the price, because you're still taking your full losses on every single trade, every single loss. You're still going to take your full loss, but now you're only capturing partial wins. And unless your expectancy or your profit factor is extremely high, this can be the difference between profitable trading and break-even trading, profitable trading and losing trading, right? It's also going to make it very hard to pull yourself out of a drawdown, as your wins are now no longer making up for your losses necessarily. Speaking of drawdown, you can see from the equity curve in front of you, I finally pulled myself out of my drawdown. It wasn't a bad one by any means. It was more just a sideways shuffle, I think between like 13.5% and like 11. But we finally got out of it with a very hot week of trading. This was an amazing week of trading. Lots of wins. They weren't necessarily big wins. I did have one home run winner on the dollar Canada. If you guys didn't see it, trial or premium members, make sure you go back to Wednesday and Thursday's live room session where we went over the trade. This was a trade that combined, we call it hybrid trading, right? This was a trade that combined both technical analysis and fundamental analysis. And very rarely do I get a trade where I go for a home run, but when the technicals and the fundamentals line up on the same side, I go for it, I went for it, I got it, and that was a big help in jumping out of that consolidation on the equity curve. I still have a few trades in progress, right? I think I have 3 on the board right now. One is already in profit, just looking for secondary targets. That could be another big winner. The other one is looking like it may lose. From a technical perspective, I'm going to assume it's going to lose, but you never know. So this curve can change a little bit by Monday, but I think it's cool for you guys to see, right? Something that I want to do with this video this year is just take you through the journey. The traders that I work with on a daily basis, this is what they see. They see not just the good, but they see the bad. They see the ugly. They see the slow. They see the fast. They see all the different stages that a trader goes through throughout the year. And I think that's very important. The internet tends to trick us into thinking it's all good all the time, and it's not. And I hope this year so far, we're not even halfway through it, has been a perfect example of that, right? I started off hot. And I told you guys, I am doing better than I expected. This will not last. And some of you guys were like, Akil, you shouldn't be so pessimistic. You should be optimistic. And I'm not being pessimistic or optimistic. I'm being realistic, right? Because I know myself, I know my numbers, I know my trading. And mentally, when I understand what the reality is, I can prepare, right? I can mentally prepare to handle periods like we just saw for the past 2 months, right? Instead of freaking out, instead of bailing on my system, and instead of doing something dumb, revenge trading, or just entering stuff too early because I got to make the money, I can say to myself, Akil, you started off really good. You're still in a good spot. This is that normal kind of slow down period. Keep trading the plan. Keep trading the plan. Don't sabotage yourself. Take good trades. Take one good trade. Take one good trade, and you'll pull yourself out of it. And for me, it's easy because I've done this for so many years, and each time you do it, it does get easier. But if this is your first time kind of witnessing what trading looks like, I hope this is a confidence boost, right? I hope this is a confidence boost. I hope it's cool to come in and see this video each and every week for the past like 8 weeks, and this guy comes in and says, hey guys, I still suck. And then finally see the hard work pay off with a massive jump in the equity curve, going from, again, 11% up to like 19% or something like that. And then we're probably going to go into consolidation again. Summer's almost near, so get ready to repeat the process. But again, the goal of trading is survival, right? You take advantage of your good times. You can see those big extensions up just like in the market. And then during your bad times, you just try to survive. And you try to tread water. You try to buy time until that next hot streak comes. And if you can consistently do that, you're going to be a really good trader. And more importantly, you're going to be a consistently profitable trader over time. And after that, now you just have to let your money management strategy do the work.